Okay, just to have some kind of revision or to re-emphasize on the journal entry what you discussed so far. I have given you here 5 problems. If you are able to see the screen, you are having question number 12, 13, 14, 15, and 16. So I'll give you some few minutes. Okay, for each transaction, maybe 2 minutes. You take 2 minutes for each transaction, and you have to journalize. And we will discuss that after you finish this journalizing. Okay, so if you take a paper, or you can take your own system, take the format of journal and do this question. Question number 12, 13, 14, 15, and 16. Then we can go for the today's session. Today we are going to discuss about marginal costing. The last class we discussed about cost accounting, cost sheet. So today we are going to discuss about marginal costing, the next aspect of cost accounting. So before that, we just have a kind of recapturing what you have done in the previous classes. That is journal. Please try journalizing these transactions. Make it, don't just tell me the answer. You just work it out, because in exam you're going to write in paper with pen. So try practicing that right now. Question number 12. Take a journal format and journalize these entries, journalize these transactions. Take few minutes time, finish it and tell me. We will discuss, then we'll move on to the next concept called marginal costing. Is that okay? Those are online, can you, are you able to understand, right, what I'm saying?
Yes, sir.
Yeah, please do that. Is the first one done? Question number 12 is done. No response. Is the question number 12 done?
Yes, sir.
Okay.
Yes.
Any doubt in question number 12? What is the entry for
No,
the
sir.
first one? January 1st.
Ah, sir. Cash account data to capital account.
Cash account debit to capital account. Okay. January 2.
Bank account data to cash account.
Okay. January 3.
Purchase good by check. Purchase account data to bank account.
Others, anybody? Question, January 7th.
Drawings account to bank account.
Drawings account debit to
Bank account.
bank account. Good. But the entry is drew cash from bank for office use. Why are you debiting drawings account?
For office.
What is the entry for Jan 7th? What is happening on Jan 7th? Money is withdrawn from the bank.
For office use. Yes.
Bank account data to bank office, sir.
Bank office. Very clever, and so many new innovations are coming in. Don't think too much. Think simple. What is happening? Jan
Bank
7th,
account
Sir,
debited to
cash comes.
cash
company.
comes in.
Cash account data to bank account.
Cash account debit to bank account. First you are withdrawing money from the bank.
The bank account
sir.
debited to company's account.
Company's account. What is company's account?
That account used by the company.
Hmm? Is there anything called company's account?
Okay.
So far we have written so many journal entries. Now, did we write anywhere company's account? Nothing is called company's account.
Okay.
It's just the opposite of the second entry. Paid into bank. When you're paying into bank, bank account debit to cash. When you're taking amount from the bank, bank to be credited, cash to be debited. So cash account debit to bank. Cash account debit.
Bank account
Sorry,
to bank account. Cash account bank account, sir.
not getting you. Cash account debit to bank account. Cash account debit to bank account. Okay. Next, 15th January,
Purchase to cash.
purchase to
Purchase account data to Shiva account.
Yours account.
purchase account debit to Siva's account. Okay. Next, 20th,
Cash account to sales account.
cash account debit to
Sales account.
sales account. 25th, paid to Siva, 14,750, discount received 250. Anybody? Paid to Shiva and discount received.
Shiva's account data
Shiva's account
and
debit
discount
how much?
received.
Shiva's account debit how much?
Sir,
Shiva's account debit how much amount?
14,750.
So why?
The 15,000, sir, total.
Tell me again. Shiva's account debit how much?
Sir, 14,750 plus discount received 250, sir.
Shiva's account debit how much, sir?
250.
So 15,000, sir.
15,000. Two.
Two discount received account and cash account, sir.
You tell the amount, sir. So Shiva's account debit 15,000. Two cash account 14,750. Discount received account
750
250.
and 250 is discount.
To discount received 250 being Shiva's account settled. So were you there in the previous classes, general entry classes? Last two classes, okay, but this was long back. Were you there? First and second class. Okay. I think we are discussing that time only. Okay, next one, paid rent 31st, paid rent 500.
Rent account DR, salary account DR to cash account.
If you say amount also, we are happy.
Okay. Rent account DR 500, salary account DR 2000, to cash account 2500.
Very good. Being rent and salary paid.
Paid. Yes, sir.
Any doubt in this up to this? 12th question. Journalizing the first step of accounting.
Sir, for 25 purchase account, debited to cash account, debited to Shiva's account.
Rent account debit 500, salary account debit 2000, to cash account 2500. Just a second. Okay, try 13th question. Have you done the 13th one? Yeah. Finish it. Finish it. Can you discuss the 13th question? First one. Received cash from Ram Kumar. What is entry?
Ram Kumar account DR to cash account.
Why, madam? Cash
Cash account debited to Ram Kumar account.
Ram Kumar.
Yes.
Cash to Ram Kumar. Cash comes in, no? Okay. Purchase to cash. Next one is purchase account debit to cash 15,000.
Purchase to cash account.
Okay. 11th, June 11th.
Damodaran account to sales account.
Damodaran account debit to sales account 22,000 being goods sold to Damodaran. Okay. 13th one.
Ram Kumar to cash account.
Ram Kumar account debit 40,000 to cash
Cash
account
account
40,000 being cash paid to Ram Kumar. 17th June.
Cash account to Ram Kumar account.
Received from Damodaran. So cash account debit 20,000
Damodaran account.
to Damodaran 20,000. 20th June.
Furniture account to
Furniture account debit to
cash account.
why cash account?
Sorry, Jagadish.
அங்கிள் போட்டுங்களா வரீங்களா
Jai.
இது சட்னி இருக்கு இல்லைங்களா
Please, those who are online, mute yourself if you are not
இருக்கு பாருங்க சட்னி
talking.
புதினா சட்னி இட்லிங்க இருக்கு இட்லிங்க இருக்கு புதினா சட்னிங்க இருக்கு புதினா சட்னி உள்ள எடுத்து வச்சிருங்க சாப்பிட்டு
Maybe you can mute also.
We don't want Pudina chutney, so we are muting. Yes, those who are talking to us, unmute yourself and say June 20th.
Jagadishan's
Furniture account to Jagdishan account.
Furniture account debit 5,000 to Jagadishan account 5,000 being furniture purchased from Jagadishan on credit. Okay, 27th
Rent
Rent
account to
account
cash
to
account.
account debit 1,200 to cash account 1,200. Okay, being rent paid. 30th June.
Salary account to cash.
Salary account debit 2,500 to cash account. Credit
Salary account debit 2,500 to cash account 2,500 being salary paid in cash. Any doubt in this 13th question, journal entries?
No, sir.
Okay, good. Then go to the 14th one and try. Take 5 more minutes and try this 14th one. Trying means not just thinking, just write down in your notebook or in a system so that it is easy for you to do it in exam. Okay, 14th question, the answer. First one, October 1st. Received cash from
Cash account to say, Shiva account.
cash account debit 75,000 to Shiva's account 75,000 being cash received from Shiva.
Shiva.
Anybody next? Any others? Other person? 7th
Syed
October.
account data to 45,000. Cash account 45,000.
Syed account debit 40,000, 45,000 to cash account 45,000 being cash paid to Syed. 10th October.
Purchase account data to cash account.
Purchase account debit 27,000 to cash account 27,000 being goods purchased for cash. Next 15th.
Debit account to bank account.
What account debit?
Debit account debit. Bank account credit.
What is that, madam? Debit
Sorry,
account
for-
debit.
Purchase account to debit account.
Buyer's account debited to cash account.
But
Purchase account debit to
To
debit
David account.
account.
purchase account debit 48,000 to debit account 48,000 being goods purchased from debit on credit. 15th.
Sir, if it was sales
Cash
account, what would be the entry?
What, madam?
If it was sales on credit.
Tell me the journal entry. Tell me the transaction.
Sales, sale of goods on credit to debit.
Okay. What's the entry? Debit account debit to sales account. To whom you are selling on credit, you have to debit them.
Okay.
All the sales, all the time when you are selling goods, you have to credit sales.
Okay.
Whenever you sell goods to sales. Okay, 3 possibilities of debit. If you sell goods, receive check, bank account debit to sales. If you sell goods, not receiving anything, the party account debit to sales. If you sell goods and receive cash immediately, cash account debit to sales. Clear?
Yes, sir.
So 15th October, sold goods for cash.
Cash account debtor 70,000 to sales account 70,000.
Cash account debit 70,000 to sales account 70,000 being goods sold for cash. Okay, take another 5 more minutes for 15th question. Do it. Yeah. You are only telling you are giving and you are getting. Okay. Mm. Mm. What is the confusion? You are giving and you are getting. One is income, one is expense. When you are giving discount, debit the discount. When you are getting discount, credit the discount. It's a expense for you, no? It's a loss. 1,000 rupees you have to receive from me, but you are receiving only 900. I'm telling that 100 rupees you keep it with you, it's a discount for you. You are telling that to me. So it's a loss for you. Cash account debit 900, discount account debit 100 to the party account 1,000. When you are allowing discount, it means you are foregoing something. You are foregoing the value. When you are saying you are allowing discount, you have to collect from me 1,000, but you are collecting from me only 900. And telling that, sir, 900 is enough, 100 rupees no longer required. Keep it as a discount. How much I given to you? 900. So cash account debit 900. Discount account debit 100. Because it's a loss. Debit all loss and expenses. To the party account 1,000. Okay. Discount allowed is expense or loss. Discount received is income or gain. Okay. So when you are allowing discount, the party account to be credited with the full amount, and how much amount you receive that need to be debited in cash account or bank account as the case may be. But and discount need to be debited always in this discount giving case. Okay. Repeat again. 1,000 rupees is to be received from Mr. Rajesh, but you received only 900 and settling his account by giving him a discount of 100. The entry will be cash account debit 900, discount allowed account debit 100 to Rajesh account 1,000. Similarly, when you are settling by paying 900 rupees, the debt of rupees 1,000 to Mr. Uday. Okay, you are paying 900 rupees to Uday, and he is telling, okay, no problem, keep it the 100 rupees as discount. He is telling for you. So you are receiving discount. Receiving means what? You are not receiving any money. Instead of giving 1,000 rupees, you are closing the account by paying only 900. So the 100 rupees is a gain for you. Okay, what's the entry now? Uday account debit 1,000, to cash account 900, to discount received account 100. Okay. Party account debit with full amount, to discount account with the discount amount, to cash account with how much you are paying. Is there any doubt in the discount entry? Those are online. Is it clear?
Yes, sir.
Okay. So please take another 5 more minutes to just read and understand and write the entries for 15th question. Question number 15. Is it done? 15th question. Yeah, 15th question, the first one, that is February 3rd. Bought goods for cash, rupees 84,500.
Purchase account DR to cash account 84,500.
Purchase account debit to cash account 84,500 being goods purchased for cash. Good. 7th February,
Dhanalakshmi account to bank account.
Dhanalakshmi account debit to,
Bank account.
madam, where the bank comes to your mind? From where from it comes to your mind?
Sir, it is on credit, right? So
So, what is
Sales account debited
One
to
second, one
some
second.
other.
others, please, 1 second, wait. Madam, on credit means what, madam? What do you mean by on credit? Why do you connect credit with the bank?
it would be received in future, right? So there won't be any cash transaction involved when the time of sale happening.
Right.
That is the reason I consider it as a bank.
Why do you unnecessarily disturb the bank?
Because you might be receiving, I mean, you're not sure, right, whether you will be receiving through cash or bank. So
You are very much right. We are not sure that we are going to receive in cash or bank. If
yeah,
that is the case, why do you trouble bank?
then you will consider it as sale.
Sorry,
What should be considered, sir? To
you tell me why bank should be considered. Why are you thinking bank to be there?
because most of the transaction, if it is not happening through cash, that should be happen through bank.
True. If I am not coming by bus, I have to come by train. That is true.
Yeah.
But what way I am coming to you? Did I tell you here that poor guy, what is the name? Dhanalakshmi. Did Dhanalakshmi tell you anything on he is going to give you on cash or she is going to give you on check?
No, but default understanding is what.
No, we cannot understand like that, no? It is about others.
Hmm.
Okay, how can you assume? It's not understanding. You are assuming that it is going to be in, not it is going to be in bank. You are assuming it is in bank. If you are crediting bank or debiting bank now, right now you're disturbing your bank account. Your bank balance is going to increase or decreasing. If you write bank account in the journal entry, either it is going to increase or it is going to decrease in your bank balance.
Okay.
Is there anything that sort is happening in February 7th because of this transaction? Dhanalakshmi is coming to you and asking for goods. You are giving goods for 55,000 rupees. And she is telling, I don't have money right now. I'll pay you later. That's all happening. She took all the goods and she is left from your place. That's all happening on 7th February. Why do you trouble the bank? Bank is no way connected to this transaction. So the entry should be sold goods to Dhanalakshmi on credit. For this, the entry should be
Sales account debited to.
sales.
Sorry, I didn't get, sir.
Dhanalakshmi account debit to cash. Sorry, to sales.
Sales. Okay.
Whenever you sell, you have to credit sales. Just now I told you. Whenever
Yeah, I got that point.
you have to credit sales because sales is an income. Rule says credit all income and gain. So I'm crediting sales. If I am crediting sales, I need something to debit. 3 possibilities are there to debit. One is cash, another one is bank, third one is party name. When I debit cash, if I receive hard cash immediately, I will debit cash.
Okay.
If I receive check, I will debit bank account. If I don't receive check or check or cash, I will be debiting the party name because the party will be giving the amount later. That time I will credit the party. Now I will debit. Why I'm debiting? They have to give me money. So I have to remember their name. So Dhanalakshmi is to be remembered. So Dhanalakshmi account debit to sales account being goods sold to Dhanalakshmi on credit for rupees 55,000.
5,000.
Okay.
Okay. Okay, sir.
Yeah, 9th
Thank
February.
you, sir.
Okay.
Commission account to cash account.
Why?
Because commission is, sorry, cash account to commission account. Sorry, sir.
Okay, cash account debited to commission. If it is commission to cash, that means you are paying commission. Paid commission. If it is paid commission, commission to cash. If it is received commission, cash to commission. Okay, cash to commission. 3,000 being commission received in cash. 10th February, cash sales rupees 1,09,000.
Cash account data to sales account 1,09,000.
Yeah, cash account debit to sales account 1,09,000. Good. Being goods sold for cash 1,09,000. 12th February, bought goods from Mahalakshmi rupees 60,000.
Purchase account दिया to Mahalakshmi account 60,000.
60,000. Oh, good. Next, 15th February, received 5 chairs from Revati and Co. at rupees 400 each.
Furniture account to Revati and Co account.
Furniture account debited to Revati and Co. account. How much amount?
2000.
400 rupees. Sorry, 5, right? 2,000.
2,000. Being furniture purchased from Revati and Co. for rupees 2,000. Last but one, 20th February, paid Revati and Co. cash for 5 chairs. What is the entry? Paid Revati and Co. cash for 5 chairs.
Revati account data to cash account.
Revati
2,000.
and Company account debited to cash account 2,000 being Revati and Company settled. Okay, Revati and Company account debit to cash account 2,000. Very good. Last one.
Salary account
Salary
दिया
account data to
10,000.
rent account data to cash.
Sorry.
Salary account दिया 10,000. Rent account दिया 5,000 to cash account 15,000.
Okay. Salary account debit 10,000. Rent account debit 5,000. To cash account 15,000 being salary 10,000 and rent 5,000 paid. Good. Yeah. Narration. Yeah. Okay. Next, 16th one. Take 2 more minutes and finish it. We have class. Class is going on. Where are you? Where were you before? Yeah, 9:30 we have started the class. We don't know that you are coming late. Oh, can change the house. Okay, is it done? 16th question. Can we go for the answer? Yeah. So the 16th question, March 1st, sold goods on credit to Mohana Sundaram for rupees 75,000. What's the entry?
Mohan Sundaram account DR to
Sales
sales
account
account
debit to
75,000.
Mohan Sundaram.
Yeah, Mohan account debited to
Sales
Cash
account.
account.
sales account.
Sales
Second,
Purchase account data to Bashyam account.
purchased goods. Purchased goods on credit from Vashyam, rupees 70,000. So entry
Purchase
is
account.
purchase account debit to
Bashyam account.
Vashyam account, 70,000.
Sir, is it necessary to use purchase or shall we use cash account only? Or whether these two are different?
Sorry, come again.
No, instead of purchase account, I have written cash account.
Instead of purchase account, you return.
Cash account.
Why? Are you receiving any cash from somebody?
Okay. When I
When
receive
you have
the
to
cash,
debit cash, when you have to debit cash, you have to debit cash only when you are receiving cash from somebody.
okay.
In this case, there is no cash received from anybody.
Okay.
And moreover, you are buying something, goods are coming in.
Yeah, right.
Purchase account debit to the giver account. Giver is Bhashyam here. 15th one,
Debit account credited, debited to cash account.
Cash account data to sales account.
cash account debit to sales. Why is so much of confusion? I don't understand. Please remember, whenever you sell, sales to be credited. It is easy to remember. Whenever you sell, cash sales to be credited. What to be debited? There are three situations. If you receive cash, debit the cash. If you receive check, debit the bank account. If you don't receive any check or cash, debit the party to whom you sold. In this case, sold goods for cash. So you received cash. You received cash. So cash account debited to sales account. David is immaterial here. David or Raja, Ravi, whoever it may be, he has given the cash. After we receive cash from him, we need not remember that name. In future, we don't want to refer this name in this account because this account is settled, account is paid. That's why. Suppose the transaction is like this: sold goods for credit to David, rupees 50,000. So the entry will be sold goods for credit to David, rupees 50,000. What will be the entry?
Debit account debited to cash.
Debit account debit to
Sales account.
sales account. Okay. Now it is cash account debited to sales account. 20th January, sorry, 20th March, received from Mohan Sundaram rupees 20,000.
Mohan's account debited to cash account.
Mohan account debited to cash account 20,000 rupees being cash received from Mohan. Okay. That's what he told. He told Ulta. Okay. So cash account debit to Mohan account rupees 20,000 cash received from Mohan.
Sir, actually, I have a question here. Here, there's no cash nor check mentioned, right? So why do you consider credit as a cash?
Received, not credit as cash. We are debiting cash. Okay.
Oh, okay.
Received from Mohan Sundaram rupees 70,000. How do you receive money?
I don't know.
Normally,
Yeah, that's also in a previous question you said.
I received 70,000 rupees from you. 70,000 rupees from you. What does it mean?
You have
You're
received.
giving me hard cash 70,000 rupees, right?
Okay.
What is your doubt?
That
You are
was,
telling that word is not there.
Yeah.
Received from Mohan Sundaram rupees 70,000 in cash.
Hmm.
It is not there. So we think that it is received in cash only. In cash only. No, you're receiving of money, rupees 70,000, either it can be received from check or from cash, via check or via cash. Via check is there means it will be given there. Simply in
Okay.
colloquial term, what we talk, I have paid you 20,000 rupees. What does it mean? You might have Google paid it or you might have given in cash.
Okay.
Only that possibility. If it is done in account, I mean bank account, it will be mentioned in the question.
Okay.
If it is simply given paid 20,000 rupees, look at the previous question 28, paid salary rupees 10,000. Why did you credit the cash there? Salary account debit 10,000 to cash account 10,000 you debit, you credited no. Why do you credit it? Salary can be given in cash or it can be given in check as well, or it can be credited into the account of the employee himself. Okay. So if there is any mentioning about that, we have to treat that as a bank transaction. If nothing is mentioned, we have to treat that as a cash transaction. That's all. Okay. That's why Mohan account, sorry, cash account debit is 70,000 to Mohan account 70,000 rupees. Last one paid to Bhashyam rupees 50,000.
Cash account debited to Bhashyam.
Why, sir? Why? Cash to be debited only when you are receiving. Are you receiving anything here? No.
Bhashyam account debited to cash.
Yeah,
account.
Bhashyam to
Bhashyam
cash.
account, debit to
Bhashyam
cash.
account debited to cash account 50,000 rupees. Please understand, when you receive cash, you have to debit. When you pay cash, you have to credit. When you sell goods.
Sir, can you just can you please repeat the 20 actually? I thought you said it the other way. What should be the entry for 20?
Received from Mohan rupees 70,000. Cash account debited to Mohan account 70,000 rupees being cash received from Mohan.
Okay. Yeah, I thought it was.
Yeah. Last one, Bhashyam account debit to cash 50,000. Any doubt in journal entries? So one question can we ask in the exam for journal entries? Yes.
Yes, sir.
Is it for 5 marks or 10 marks, sir?
This is too much, no?
Just to prepare, sir.
Huh?
When are the exams, sir? Is it happening on the scheduled
It is
date?
happening. It is
Or
happening.
Postponements.
Yeah, they will tell you. Okay. Even I don't have any idea about the date and other things. College will inform you. Don't worry.
Okay,
They'll
because
keep you
under
posted.
1 month left, right? So we don't
Yeah.
have any update yet.
Yeah, they will keep you posted. No problem.
Okay.
Yeah, if I happen to know this, I'll inform you. Otherwise, I don't have any idea up to now. Okay. So one question can be there for journal entries. Okay.
Sir, marks, please. What marks? 5 marks or 10 marks?
Right. Then I am wrong. See, it's only a courtesy, like, come. There is a nearby one seat is free. Somebody is coming. Can I sit here? That's only courtesy. They're going to sit there itself. Okay, you cannot say no. Simply, I'm telling you that one question can be there. I'm just asking you. That's only a formality. That's it. One question is going to be there. But
Okay.
you are asking how much mark, then that is not good. No. It can be for 5 mark, or it can be for 10 mark, or it can be for 15 mark. Only 3 chances. Either 10 mark, or 15 mark, or 5 mark. Madam, is it okay?
I think she wants to see how much effort she has to put in completely
Yeah,
understanding.
he has to put in 100% effort. 100%. Put your 100% so that you'll get some 40% mark. Okay. All right.
Good one, sir.
Yeah. All right. So anybody has any other doubt with regard to journal? Because I thought of informing you that it is going to come so that you'll be a little more prepared. Yes, madam. Excuse me. Hello. Pooja. Okay. How are you? Why are you coming late? Sunday morning, Sunday afternoon. No. We told you class is in the morning, you are coming in the afternoon. You are too early for the afternoon class. Okay. That apart, anybody has any doubt in the journal entries? Please practice as many questions as possible on journal entries. Okay. Can we move to the next aspect, that is costing? In the last class, costing, I think we have met long back. 3 weeks consecutively, we did not have any class. In cost accounting, what you have done? We have done only cost sheet, or we have done marginal costing also?
Just a cost sheet, sir.
Just a cost sheet you have done.
Yeah.
Fine. So let us discuss today for the next few more minutes. Marginal costing. I'll share you the another file. Is another PDF file visible to you?
Yes, sir.
Okay. Yeah. So this is marginal costing. You remember in the last class, in the previous class, we have discussed about some of the tools, techniques, or methods of costing. When I say methods of costing, it is nothing but the method used to identify the cost, to ascertain the cost. When I say tools of cost accounting, it refers to some of the techniques that are used to control the cost. The basic objective of cost accounting, basic objectives of cost accounting are two. One is ascertainment of cost, another one is to have control over the cost. If I am a manufacturer of something, I should be able to ascertain the cost of my product, and I should be able to quote some price in the market. That is one of the objectives of cost accounting. Second objective of cost accounting is to have enough control on the cost of all the aspects of the product, maybe a material, labor, overheads. Okay. So now we are coming to the next one. In the first one, we have discussed about only one thing, unit costing or uniform costing. Okay, that is what cost sheet. We prepared a cost sheet. How to arrive at the cost of a product. Today's class, we are going to discuss about one of the costing techniques or one of the costing tool that is available for us to have a control over the cost. Okay, there are many tools available. Standard costing is one of the tool. Okay, variance analysis, ABC costing, activity-based costing, or always better control costing. That's another. So many costing techniques are available to have a control over the cost. One among them is marginal costing. How it is connected to us? Why do we discuss this? Marginal costing is connected to management to help the management to take a decision whether to produce this product or not, whether to produce this and sell, or we can switch over to some other product. Okay. What is marginal in English? Marginal means normally what we mean by literary meaning of marginal, nearby. Okay. Any other? Marginal. You heard about marginal? Marginal, nearby only one.
It's
Anybody?
like a boundary. It's above, over the margin or below the margin.
Okay, margin. I'm not asking margin, marginal.
Something very small, very.
Yeah, that's what we use in the sentence marginal. Yeah, marginal farmers, small farmers. Okay, something very small. Okay, anybody?
Keeping, if it is marginal profit, it means profit is the least. Below that, it will go into the loss.
Okay. Okay, here marginal, same meaning only, little different. Marginal means marginal costing or marginal cost. Marginal cost means the incremental cost, the additional cost, the extra cost, what we are incurring to produce one more unit of output. Suppose to produce 100 units, the total cost to produce 100 unit is 10,000. 100 unit is equal to 10,000 rupees of cost. If I want to produce one more unit, meaning 101st unit, 101st unit, if I am going to produce in addition of existing unit of 100, that is 101 unit, how much is going to increase in the total cost? What was the total cost I told you to produce 100 units? 10,000. Okay, now if you produce one more unit, addition to the existing unit of 100, if you are going to produce one more unit, your total cost is going to become 10,100. So what's the marginal cost here? 100 rupees of marginal cost. So marginal cost is nothing but the extra or the additional or the incremental cost to produce one more additional unit of existing production. Okay. Having understood that marginal cost, that is marginal costing. By applying this principle of marginal cost, we are trying to find out some of the important aspects that is called break-even point. If you are going to start a business, or you are already in the business, you want to accept an order or you want to reject an order. For that purpose, we should know what is the break-even point. What is break-even point? In general, what is break-even point?
Threshold point. Above that, where we cannot go further.
Above that, we cannot
Move further, but it's a break. Threshold is like it is the maximum point.
It is a maximum point. Okay.
It is maximum threshold point where the curve will end.
Curve will
The
end.
decline
Okay.
will start.
It's
Okay.
a point where where it will be under profit or loss. If you go above that, item will be under loss or item will be under profit.
If you go beyond that point, it will be
Under profit or under loss. For example, if I am starting a sales of one goods and my profit will start after selling 10 goods, then the break-even point is the 10th good.
so. If you cross the break-even point, you are trying to enter into
Profit.
profit. It's not profit or loss. If you
Yeah.
cross break-even point, you are entering in profit zone. So
Yeah.
what is break-even point then? The point at which the company is neither in profit nor in loss. What do you mean by that point at which? What do you mean by point? The sales, number of units sold, or the amount of sales. Suppose my sales is 10,000 rupees. Amount of sales is 10,000 rupees. I'm getting profit of 0. If that is the case, my break-even point is rupees 10,000 as sales. 1 unit is equal to 1 rupee. Then what is the number of units of my break-even point? 10,000 units. So break-even point can be expressed in terms of value of sales, or it can be expressed in terms of quantity, unit of sales. Okay. How do we find it out? For that, we need this marginal costing technique. Okay. If you agree, break-even point is nothing but a point at which the company does not have profit or loss. If that is the case, what's the other side of it? That's one side of looking at the break-even point. If the company does not have profit or loss, that means what's the other side of understanding? When a company will have profit, how do we mathematically calculate profit?
It's the total investment minus earned.
Why do you go to investment, gentlemen? Are we having anything so far in the profit and loss account? Investment.
No.
Investment is different from profit. Please understand.
Selling price minus cost price is
That's
equal
it,
to
simple.
profit.
Sales minus cost is equal to profit. That's all. The cost includes the portion of your investment also. The cost may be of many costs. Routine cost, revenue expenditure, or it may be a capital expenditure. You are buying a building for 1 crore. You are selling goods only for 9 lakhs. So 9 lakhs minus 1 crore, then it is going to be minus only. Always it will be negative profit only, I mean loss only. So that's not a right way of calculating profit. Profit is equal to sales minus selling price minus cost. Sales minus excess of income over expenditure. Excess of income over expenditure is called profit. That expenditure includes how much amount of capital expenditure, how much amount of investment to be charged to profit. I have purchased land, I mean building for 1 crore. All the 1 crore is not the cost in this equation. Income minus expenditure. That expenditure does not include 1 crore. It includes only that part of the building utilized for current year. Suppose that building is going to be used by you for the next 100 years. The cost of the building for 1 year is 1 crore divided by 100. That will be added to the cost, added to the expenditure to find out the profit, to minus from income to find out profit. Okay. If that is the case, if your company is in break-even point, what is the other side of it? No
Sales is
profit, no
equal to
loss.
cost.
Sorry?
Sales is equal to cost.
Sales is equal to
Cost.
cost. That's the other way of looking at it. Suppose when the profit is equal to 0, sales will be equal to exactly equal to cost. Okay. According to marginal costing, we divide the cost into two. One is variable cost, another one is fixed cost. Variable cost and fixed cost. Variable cost and fixed cost. So what is variable cost? Anybody? What we mean by variable cost?
Cost which would be which may change in terms of raw material purchased, overhead expenses, which may keep changing with time.
Okay, so yesterday
On the order of basis.
one
which is
second.
other thing.
One second. Yesterday I purchased a raw material for 4 rupee. Today the cost is increasing to 4.10 paisa. So you mean to say that as a variable cost?
Is it like the cost involved? Maybe like use of the electricity. It depends on the number of units that is used.
So
Involved in manufacturing.
Involved in manufacturing.
okay. Anybody else? What is variable cost?
Overhead expenses.
Madam, exam will come to later. Tell me what do you mean by variable cost? How do we define? How do we understand what we really mean by variable cost? 1 minute. One of your classmates in the class is trying to say something. Yes, sir. So bulk purchase. That's discount, no? Okay. Per unit. Okay. Fine. Anybody?
Let's say in terms of a petroleum company, it's buying crude oil, which is constantly changing in terms of input price. So whatever cost they're buying may change by 10 rupees, 15 rupees, 5 rupees, whatever is the change in the price. So that's varying where you do not have control over that costing. So that will be
If that is the case, everything is in that nature only, no? Today I'm buying rice for 40 rupees. Next month it may be 41 rupees. Don't you think that is the inflation?
Yes, that's an inflation.
Inflation.
Or it is based on the. Or it is based on the market condition, demand and supply.
Market condition, I would say, because the cost of petroleum crude oil can also go down depending on the demand.
Okay, so market condition. The price you are telling about price changes, right? Change of price.
Yes, sir. Change of raw material purchase.
Change of price of anything.
Yes, and also overhead expenses. You may need more employees, less employees. Maybe somebody has moved out. You need to hire new people.
Let us come back. Yeah. Okay, fine. That is one way of understanding. Anybody?
Is it the number of goods or services produced which vary according to the manufacturing
Yeah, that's what we want to say. It is nothing but the change in the output. Change in the output will result in the change in the cost of such product, such element of cost. That is called variable cost. I'll tell you again, please understand. Variable cost is a cost which changes, which varies according to the volume of production. For my company, if I produce 10,000 units, what is the raw material I'm using? If I'm producing 15,000 units, how much amount of raw material I'm using? Definitely it is going to increase, right? To make one particular product, if I need 2 kg of input A, if I want to make 2 output, so I need 4 kg of that particular input. So that is what we call in marginal costing as variable cost. I repeat again, variable cost is a cost which changes according to the volume of production. If I increase the number of units to be produced, the cost of input will increase. If it is increasing, that cost is called as variable cost. Example for variable cost is raw material cost. It is not about in market how much I'm going to get. It's about my usage, how much I need to use. If I produce 1 unit, what is the input required? If I produce 2 units, it is going to be double. So those costs, we call it as variable cost.
In that case, sir, electricity is also a variable cost?
No. Electricity is not just a variable cost. If I produce 1 unit, suppose, assume what we are standing today in the classroom, this is a room to use for manufacturing a furniture. Today I'm producing only 1 furniture. Tomorrow I'm producing 2 furniture. Day after tomorrow, maybe 10 furniture is made here. But electricity, the same electricity only is being consumed. If it is just for lighting. So electricity is a peculiar nature. Electricity is not just a variable cost. Electricity, we have to call it as semi-variable cost because up to certain consumption, we have to pay a fixed amount. Whether you consume only 1 unit of electricity or 2 units of electricity, you have to pay that fixed amount. Up to 100 units, assume, I'm settling an assumption, up to 100 units of consumption, you have to pay 400 rupees. Whether you use it or not, you have to pay 400. After consuming 100 units, 101st unit onwards, per unit, there will be some rate. If you cross 500 units, then 501st unit to some 1000 unit, the rate will be changing. So this is called a semi-variable cost. Don't bring electricity. Electricity is something which is, without electricity also we can produce something. Electricity is not compulsory.
Yeah,
Suppose you are having automatic production technique, then electricity is required. Otherwise, electricity is not required. So electricity is peculiar nature. Electricity is cost of electricity is semi-variable cost. First, let us understand the core aspect of variability. Variability means output, with the tune of output, this cost is also increasing. If I increase the output, this cost will increase. If I reduce the cost, reduce the output, this cost will also decrease. Suppose to produce 1 notebook, I need 100 pages. 100 pages are available in the market to be purchased by my notebook company by spending rupees 10 rupee. So what is the paper cost of 1 notebook? 10 rupee. If I produce 2 notebook, how much I have to spend on paper? 20 rupees I have to spend. If I am producing 1000 unit of notebook, 1000 number of notebooks, how much I have to spend with respect to material? 1000 into 10,000 rupees. So this is what we call it as variable cost. All direct costs are variable cost. Direct material, direct labor, direct expenses. All direct costs are called as variable cost. If you increase the volume of production, this cost will increase. I'm not talking about the increase in the price of the paper. So yesterday I bought it for 10 rupee. Today it is available in the market for 11 rupee. We are not talking about that difference between 10 and 11. That is market condition. I don't have anything to do with that. Okay, at what rate I'm buying? On that rate, I'm going to calculate the total cost. Okay, so my increase in the volume of production results in increase of cost. So such costs are called as variable cost. Example, material, direct labor, and direct expenses. Second component of cost according to marginal costing is fixed cost. What is fixed cost? In similar manner, fixed cost is a cost which remains constant, which remains unchanged, irrespective of the volume of production. Assume today we have taken this room for rent to conduct your class. Only 5 members are attending the class. I have taken this room by spending 1,000 rupees per day rent. What is the cost of this room? 1,000 rupees. How many are attending the class? Only 5. Suppose tomorrow 50 members are attending the class. That time also, how much I have to pay the rent? 1,000 rupees only. Another day, only one student is attending. Possible? Maybe possible. You are all like that only. Okay. So only one student is attending. That time also I have to pay 10,000 rupees as rent. Yes, please mute yourself. Those who are not speaking to us. Okay, so fixed cost is nothing but a cost which remains unchanged, which remains constant, irrespective of the volume of production, overall volume of production. 10 students are sitting here, 15 students are sitting here. Same rent is to be paid for the room. Same example you take for a factory. Factory premises has been taken for rent. Their production is happening. Due to lockdown, no production is happening. Zero production. Rent is to be paid, irrespective of your level of operation, irrespective of your level of utilization. The amount is to be paid. The cost is to be incurred. Those costs are called as fixed cost. Okay. Now, according to marginal costing, look at this on the board. You are having a small example. Okay. So variable cost per unit is 25 rupees. Fixed cost is 1 lakh rupee. So cost of 10,000 unit is equal to 25 rupees into 10,000 units. So it's equal to 2,50,000 plus 1 lakh rupee of fixed cost. So the total cost is going to be 3,50,000. In this 3,50,000, 1 lakh is the fixed cost and 2,50,000 is the variable cost. Now, if you introduce one more unit, I want to produce one more unit. How much amount will increase? Only 25 rupees will increase because this 1 lakh is going to be constant irrespective of your volume of production. Okay. So I have to spend for only raw material. I have to only buy paper to make one more notebook. Okay. The rent is already paid. Even if you don't produce any unit, also rent is paid. So 25 rupees is going to be extra incurring for producing one more unit. The 25 is called as just marginal cost or just variable cost. Marginal, variable, both are one and the same. Marginal costing. Marginal cost. Okay. Incremental cost, marginal cost, or variable cost are one and the same. Okay. So having understood this, come to the statement in which we can find out the profit or loss. Look at this. This is a statement from which we can find out the profit or loss. You already told sales minus cost is equal to profit. But now we understood the cost can be of two categories. So we are having a breakup, that's it. Okay. So sales minus variable cost is equal to some amount you will get. That amount we can call it here in the marginal costing as contribution. What is the amount excess available with you after meeting out your variable cost out of your sales? Suppose I'm selling my product for 10 rupee. Okay. 10 rupee I'm selling a product. Out of 10 rupee, I have spent 4 rupee as variable cost. So remaining 6 rupee is called as contribution. Excess of variable cost over excess of variable cost over sales is called as contribution, excess of variable cost. How much is excess? Okay, sales is 10 rupee, variable cost 6 rupee. So contribution is going to be 4 rupees. Okay, look at this example given here in the file. Sales of the company is 25 lakhs. And there are some expenses, cost of products manufactured, and variable selling expense and variable administrative expense. So total variable cost is 15 lakh 50,000. If that is the case, the contribution is equal to sales minus variable cost. So sales is 25 lakhs and the total variable cost is 15 lakh 50,000. So the contribution is going to be 9 lakh 50,000. Okay, so this is the contribution. If it is a contribution, you have to minus which one? From contribution, you have to minus fixed cost. One more cost we left out. No, fixed cost you have to minus. If you minus fixed cost, you will get profit. If that profit is going to be 0, then the sales, what is the starting point, is called as break-even point. Okay. So this is how you have to understand the marginal costing. This is called income statement under marginal costing. Income statement. Okay, this is going to be your final profit. Okay, now how do we find out marginal costing? Sorry, how do we find out break-even point? How do we find out break-even point? Please note down these formulas. Sales is equal to variable cost plus fixed cost plus or minus profit or loss. Right or not? Sales is nothing but the product of these three. I mean, the sum of these three. The sum of these three. What are the three? Cost plus profit or loss. The cost can be of two types: variable cost and fixed cost. So contribution is equal to sales minus variable cost. Profit is equal to fixed cost. Contribution minus fixed cost. Contribution is equal to sales minus marginal cost. Profit is equal to contribution minus fixed cost. Only one equation, but we are having many variety of it, variant of it. Okay, simple equation: sales is equal. Profit is equal to sales minus variable cost minus. Complete it. Profit is equal to sales minus variable cost minus. Profit is equal to sales minus variable cost minus fixed cost. That's the only equation, but we are having different variant of it. Sales is equal to variable cost plus fixed cost minus loss or plus profit. Otherwise, sales minus variable cost is equal to fixed cost plus profit or loss. Sales minus variable cost is equal to contribution. Contribution is equal to sales minus variable cost or marginal cost. Both are same. Marginal and variable, both are same. Okay. Next one concept you have to understand. To know how to find out break-even point. We can't always prepare a table, trial and error method, and find out profit is equal to 0 or not. If that is the case, it will take too much of time. We already understood break-even point is nothing but a point at which profit of a company is going to be 0 for that level of activity. That level of activity is called break-even point. Okay, now we can't do trial and error method to reach the profit is equal to 0. We should have some shortcut, or we should have some formula to arrive at the break-even point. For that, we have a formula. That formula is equal to fixed cost divided by PV ratio. So what is PV ratio? Please write down. Break-even point is equal to fixed cost divided by profit volume ratio. Okay, so fixed cost divided by profit volume ratio. What is profit volume ratio? Profit volume ratio is nothing but, look at the formula, contribution divided by sales into 100. Contribution divided by sales into 100. We can call it as contribution ratio as well. Profit volume ratio is nothing but contribution ratio. Contributions to sales ratio. Okay, that's why it is written here. Contribution divided by sales into 100 is called PV ratio. Okay. Look at this break-even point. Okay. So when the total cost of executing business, the total cost of carrying out a business is just equal to the total sales of the business. The total cost is equal to total sales. Then that point is called as break-even point. So break-even point can be found out by a formula I just now told you. One more formula is there. Break-even point in units. That one will give you in value. What you have taken is already taken. That formula will give you in the value, rupees or dollar. Okay, what unit of value you are having. Another one is in units. Break-even point in unit. How do you calculate break-even point in unit? Break-even point in unit is equal to total fixed cost divided by contribution per unit. Very important, contribution per unit. Okay, sales per unit minus contribution per unit is equal to sales per unit minus variable cost per unit is equal to contribution per unit. Okay, so the formula to calculate break-even point in unit is equal to fixed cost divided by contribution per unit. Contribution per unit. Next, another concept is called as margin of safety. Margin of safety. What is margin of safety? Just now we told in the beginning. If you reach break-even point and you are still going beyond that, beyond break-even point, everything is called as margin of safety. So margin of safety means your safety by how many units, your safety by how much amount of profit. So margin of safety is equal to actual sales minus break-even sales. Actual sales minus break-even sales. Suppose 10,000 unit is the break-even sales. Your company is expected to sell 10,000 unit of product so that you will reach zero profit or zero loss. If that is the case, your company is actually selling 18,000 units. So what's the margin of safety now? Your company is safe by 8,000 unit of sales. 8,000 unit of sales. Okay, that's why we're writing this formula. Actual sales minus break-even sales. Actual sales minus break-even sales. Okay, another formula to calculate margin of safety, that is profit divided by PV ratio. Profit divided by PV ratio. Profit divided by PV ratio. Look at this chart, a graphical representation of break-even point. Yeah, break-even point. Break-even point is a point at which the total cost meets the total revenue. Okay, look at the chart. We marked there. It's a break-even point. Yeah. 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 Yes.
So break-even sales means whatever I'm getting from this formula, right?
Which formula? Yes. Yes. Correct. Okay. So break-even point can be identified by having a break-even chart also. The total cost touches the total sales, or the total sales, total revenue touches the total cost. That point is called as break-even point. Look at this diagram. Say, for example, in the 5 lakhs, 7 lakh 50,000, 10 lakh, 2 lakh, all these are all amount. Okay, amount. This side it is number of units produced and sold. Okay, say for example, 25,000 units are produced means, okay, my break-even point is achieved there because the total cost and the total revenue is equal. One is cost curve, another one is revenue curve. Okay, the total cost and total revenue is touching. the same point. That point is called as break-even point. Any doubt in this break-even point? We will take one or two questions now before we close today. Questions on this break-even point. Anybody has any doubt before we take a question? Theoretical understanding. What is break-even point? Why we need this? How do we calculate it? Okay, and then concept associated with that. Okay, if no doubt now, we can take break now. After the break, we can do some questions, numericals. Okay. See you. Take a break for 10 minutes. Start. Audible, those are online.
Yes, sir. It's audible.
Thank you. So look at this question. Small example. There is a data. There is a company which produces 3 products, namely product A, product B, product C. The sales of product A is expected to be 1,50,000 and that of B is 90,000 and that of C is 60,000. The variable cost for product A 1,20,000, product B with 63,000, product C 36,000. And total fixed cost is 40,500. And we are asked to calculate profit volume ratio and also the total profit from these 3 products. Can you try? What will be the PV ratio? Profit volume ratio. What is the profit volume ratio formula? Profit volume ratio is equal to contribution divided by sales into 100. Calculate that for 3 products. PV ratio for product A, product B, product C. First write PV ratio is equal to contribution by sales into 100. Then you write contribution is equal to sales minus variable cost. Contribution is equal to sales minus variable cost. Then for the first one, what will be the contribution? 1,50,000 minus 1,20,000, that is equal to 30,000. 30,000 is the contribution for product A. 30,000 divided by 30,000 divided by how much? Are you getting the point? I am asking you to calculate PV ratio. PV ratio is equal to contribution divided by sales into 100. That's a formula. Again, contribution is equal to sales minus variable cost. For the product A, contribution is equal to how much? 30,000. If that is the case, 30,000 divided by PV ratio is equal to 30,000 divided by 1,50,000 into 100. That is equal to how much? 20% is the contribution, PV ratio for product A. Similarly, for product B, compute the PV ratio for product B. The difference between sales and variable cost is equal to contribution, that is 90 minus 63. 90 minus 63. That's equal to 27,000. 27,000 divided by 90,000 into 100. You'll get 30%. Calculate the PV ratio for product C. It not need to be in this same table because it's asked only PV ratio. You can just do it on the statement form, no problem. 60 minus 36, that's equal to 24. 24 by 60 is equal to 40%. So PV ratio is nothing but contribution ratio, contribution to sales ratio, contribution to sales ratio. contribution to sales ratio, otherwise PV ratio for C is equal to 40%. Are you getting 40%? Yeah. That's one part of the question. Another part of the question is total profit from the three product. So now how do you calculate profit? Profit is equal to contribution minus fixed cost. We have three products and we have contribution of three products. So add all the three products contribution, total contribution. Next line, profit is equal to total contribution minus total fixed cost. Total contribution minus total fixed cost. So total contribution means 30,000 plus 27,000 plus 24,000 minus 40,500. 40,500 is the fixed cost. If that is the case, your profit from these three product is how much? Is it 40,500? What is the total contribution? Total contribution of three products. Contribution from three products, 81,000 minus fixed cost. 81,000 minus fixed cost. Fixed cost is given in the question 40,500. What does it mean? To produce these three products, they need some space, they need some other overhead expenditure. All those things put together fixed is equal to 40,500. So 81,000 minus 40,500 is equal to profit. So out of these three products, which product is more contributing towards profit? Which product is contributing more towards profit?
Product C.
Product C is contributing more towards profit because it has 40% as PV ratio. If I sell for 100, 40 rupees is going to utilize for my fixed cost, 40%. So that is having more PV ratio, contribution to sales ratio. So this is small example through which we can understand what is PV ratio and what is profit. Next one is CVP analysis. CVP analysis means cost, volume, profit analysis. Same thing, the break-even point, and the extension is called CVP analysis. If cost increased by what percentage, or the volume of sales increased by what percentage, what is the impact of these two increases on profit? Suppose my sales was 100. Now my sales is going to be 150. What is going to be the impact on profit? 50% increase in sales. What is the resulting? What's the result of that 50% increase in sales in the impact of or increase in profit? That analysis is called as cost, volume, profit analysis. Okay, it's concerned with the level of activity where total sales equals to the total cost. Okay, that is called break-even point. Total revenue is equal to total cost is called break-even point. Look at this. This already we discussed. We'll take one more example. Yeah, take this example. Calculate break-even point. Drawing break-even chart, you leave it, no problem. Calculate break-even point for the given data. The data is very simple. Fixed cost 2,50,000. Variable cost 15 per unit. Please understand. Per unit, somewhere it is given per unit. Somewhere it is given total. You have to be very careful in taking the data. Break-even point in unit is equal to fixed cost divided by total fixed cost divided by contribution per unit. That's very important. Okay, break-even point in value is equal to total cost, total fixed cost divided by profit volume ratio. Okay, so now there are some data. Fixed cost of a company is 2,55,000. So 2,50,000. Variable cost to make one unit is rupees 15. Selling price for one unit is 25. And then they are asking you to comment on the company's production level in units of 12,000, 15,000, 20,000, 25,000, 30,000, and 40,000. If company is producing 12, only 12,000 units, what's the status? What is the break-even point, or what is the level of the company? Okay, that's what you have to calculate. First, we can calculate the break-even point. Take the break-even point formula, calculation of break-even point. Break-even point is equal to, look at this question, we have only per unit data. Okay. Variable cost per unit, selling price per unit. You can take both. I mean, PV ratio also we can calculate, or we can calculate contribution per unit also. Okay, so any one formula you can apply, or we can apply both the formula. Write it first. Break-even point in units. The formula is equal to break-even point in units is equal to total fixed cost divided by contribution per unit. Contribution per unit. Next, what is the contribution per unit? Calculate the contribution per unit. Contribution per unit is equal to selling price per unit minus variable cost per unit. Contribution per unit is equal to selling price per unit minus variable cost per unit. That is equal to 25 rupees minus 15 rupees. The answer is rupees 10. Contribution per unit is equal to rupees 10. Contribution per unit is equal to rupees 10. How it is rupees 10? This 25 rupees is the selling price per unit. 15 is the variable cost per unit. If you minus 15 from 25, you will get 10 rupee per unit. That is contribution per unit. Okay, next line. 2,50,000 divided by 2,50,000. Break-even point in unit is equal to 2,50,000 divided by 10. 2,50,000 divided by 10 rupee is equal to 25,000 units. 25,000 units. Next, break-even point in rupees. Break-even point in rupees. How do you calculate break-even point in rupees? Fixed cost divided by PV ratio. Fixed cost divided by PV ratio. Next line, PV ratio is equal to contribution by sales. Contribution by sales. What is contribution? 10 rupee. We already identified 10 rupee is the contribution. So 10 by selling price. What is selling price? 25. 10 by 25 is equal to 10 by 25 is equal to 0.4, 40%. 0.4, 40%. Now substitute this 40% in that equation. Break-even point in value is equal to 2,50,000 divided by 0.4. 2,50,000 divided by 0.4. How much? 2,50,000 divided by 40% is equal to 6,25,000. 6,25,000 rupees. That is rupees. This is one way of calculating. Otherwise, what we can do? We have already the number of units of break-even point. We know selling price of 1 unit. If we multiply these two, we'll get it. Next line, break-even point in rupees is equal to alternatively, break-even point in rupees is equal to break-even point in rupees is equal to break-even point in unit multiplied by break-even point in unit multiplied by selling price per unit. Selling price per unit. We already have break-even point in unit, that is 25,000 units. Multiplied by selling price we already have in the question, that is rupees 25. So 25,000 units into rupees 25 is equal to how much? Same amount you're getting, 6,25,000 rupees. 6,25,000 rupees. Look at this. We found out 6,25,000 rupees is the break even. Now to prove this, the first one time, no, we just prove it. Let us take a statement. Take it, income statement. Income statement. Income statement within bracket for break even point. We already found out the break even point in unit also as well as in the rupees also. Now we are going to prove, we are going to check. See, break even point should give no loss, no profit. We'll check that. Okay. Take it, sales is equal to one is particular column and amount column. You take it just one side particular, another side amount, or simply you can take sales. Okay. Sales is equal to how much? What's the amount of sales you found out? Break even sales? 6,25,000. Write the amount. 6,25,000. Next line minus variable cost. What is variable cost for this amount? What is the number of units? 25,000. So variable cost within bracket 25,000 unit into what is the variable cost per unit? 15. So 25,000 into 15. How much you're getting? Write it. 25,000 units multiplied by 15 rupees of variable cost per unit. You will get how much? 3,75,000. 3,75,000. Is it right? Check it once again and write it. Okay. Next line, contribution. If you minus that, you'll get contribution. What is contribution now? 2,50,000 minus fixed cost. Minus fixed cost. How much fixed cost given the question? How much fixed cost? 2,50,000. So what is the profit now? 0. That is how it is proved. This is what break even point is. That is 25,000 units, right? Yeah, 25,000 units. Otherwise, 6,25,000 rupees. Okay, now come to the question. The question says, comment on the production level of 12,000 units, 15,000 units, 20,000 units, 25, 30, and 45. What we are going to comment is nothing but how much the company is going to earn out of this production. Okay, we'll take another table now. 1, 2, 3, 4, 5, 6, 7 column. One is for particulars column. All are for level of production. Okay, particulars. First column is particulars. Second column is level of production. That second column you can subdivide by 3, 6 columns. Level of production. Okay, level of production. Under level of production, write all these sub column: 12,000 units, 15,000 units, 20,000 units, 25,000 units, 30,000 units, and 40,000 units. Okay, particulars and level of production. Level 1 is 12,000 units, level 2 15,000, 3 30,000, 20,000, level 4 25,000, last but one 30,000, last one is 40,000 units. The same table what you have done so far, I mean the previous one, income statement, we are going to do for columnar form for all these level. First one, sales is equal to, in particulars column, write sales. Now how much will be the amount of sales in the first one? Sales at the rate of how much? What is the selling price? 25 rupees. So at the rate of 25. Okay. So 25 into 12. How much? 25,000 into 12 rupees. How much will come for this? 3 lakhs. This is sales, no? Sales. Write it. Sales for all the levels. First level, second level, third level. Look at this. First one is 3 lakh. Second one is 3,75,000. Third one is 5 lakhs. Fourth one we already calculated in the previous table. What is that amount? 6,25,000. You write like this. This 25 into this. This 25 into this. This 25. Okay. Minus, next line, minus variable cost. Now variable cost at the rate of how much? 15. At the rate of 15. 15 into 12. 15,000 into 15 rupees. Calculate for all the level of production. Your variable cost is 15 for 1 unit. There are different levels of units. Okay, so 12,000 units into 15, 15,000 units into 15, 20,000 units into 15 rupees, 25,000 units into 15 rupees, last but one 30,000 units into 15 rupees, last one 40,000 units into 15 rupees. Calculate the variable cost. Particulars. Second one is level of production. Level of production. This table is like a different one. Okay, I have told you the same table what you have done just before. Same table for different levels of production. Okay. Yeah. So level of production is there, no? Right. So now sales at the rate of how much? At the rate of 25 rupees. Fine. So what you did 25 into this, you got it. Now minus variable cost. Variable cost we already know in the question it is given. Variable cost at the rate of how much? 15. At the rate of 15. Now you multiply this 15 with all the respective level of output, level of production, and write it and minus. If you minus the variable cost of the respective level of output from the sales, you will get contribution. So contribution for the first level of production is 1,20,000. That is nothing but 3 lakhs minus 1,80,000. Likewise, you calculate for all the level. Contribution, you calculate it for all the level. After calculating the contribution for all the level minus fixed cost. Fixed cost is common for all. Even if you operate at 12,000 unit, even you operate at 40,000 unit, your fixed cost remains constant. That is how much fixed cost is 2,50,000. So minus 2,50,000 irrespective of the level of production in the name of fixed cost. Which one? No, I'll come to that. We are still in the profit calculation. So much you are getting loss only? Okay, yeah, correct. Before zero, it is all loss. After that, it will be profit. So profit for first case 1,30,000 minus, second case 1 lakh minus, third case minus 50,000, fourth case it is 0. That's what we already found out. Okay. Fifth one 50,000, sixth one 1,50,000. That's a profit. Next, after this table, next margin of safety. Margin of safety means what? Actual sales minus break-even sales. Actual sales is, in the first case, it is 12,000 units. Break-even sales is 25,000 units. So it's minus 1 lakh, sorry, minus 13,000. Minus 13,000, right? So it's, there is no margin of safety. That's why I written dash. Margin of safety actually it's minus. In this case, minus. So I don't, margin means it's plus. So I don't write it here. Margin of safety starts only when if you reach, break-even point. After that, margin of safety starts. Okay. How this 5,000 has come? 30,000 units minus 25,000 units. 30,000 is the actual production, actual sales. Minus break-even sales. Break-even sales how much? 25,000. Yeah. So you write it margin of safety dash 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 dash. Last but one you write. There also dash. Last but one is margin of safety is 5,000 units. 5,000 units. This is 5,000 units. Okay. 15,000 units. Simply you can say this 30,000 minus break-even point. Break-even point is 25,000. So 30 minus 25 is equal to 5. 40 minus 25 is equal to 15. Otherwise, you can have another formula: profit divided by contribution per unit. What's the profit of fourth last but one? What is the profit? If you produce 30,000 unit and sell it, what is your profit? 50,000. 50,000 divided by contribution per unit. What's the contribution per unit? Contribution per unit is? Why do you think so too much? It's already done, no? Contribution per unit, 10 rupee. So 50,000 divided by 10 is equal to 5,000. Next one, 1,50,000 divided by 10 is equal to 15,000. Yeah. Because margin of safety, when you are safe, even in break-even point also you are not safe. You are safe by no loss. Okay. After break-even point only you are safe by some number of amount, some amount of money. Okay. So margin of safety can be calculated in two ways. One is simple, that is actual sales minus break-even sales. Very simple. What is actual sales in this case? In this case, actual sales is 30,000. What is the break-even sales? 25,000. So 25 is minus from 30 is equal to 5,000. Similarly, 40,000 minus 25 is equal to 15,000. This is one way of calculating it. Otherwise, we have another way of calculating the margin of safety, that is profit divided by contribution per unit. Quantity. If you want to tell in value, you can say margin of safety in value, 5,000 into selling price. Okay. So, but actually we'll say in number of units. I am safe by 5,000 units. Okay. So profit by contribution per unit. Profit of this case is 50,000. Contribution per unit is 10 rupees. So 50,000 by 10 rupees equal to 5,000. Similarly, last case, 1,50,000 is the profit divided by 10 rupee of contribution per unit, that is equal to 15,000. So this is what the company is. Okay, the same thing is represented in the form of a chart. A chart is not required. We can just calculate. We already calculated. Okay. So this is about the small concept of margin of safety, break-even point, CVP analysis, marginal costing, or income statement under marginal costing. Any doubt in this? I don't think any problem I have right now. If it is in LMS, you can take it and work it out. Any doubt in this? Okay, I'll give you one small question because we have done only one. I'll give you one more question. We'll try that also. Okay. I'll share it, otherwise I'll read it. Small problem, we can do that. We can read it out. Okay. Just a second, I'll just tell you. I'll share it in the WhatsApp group. From there we can take it. Okay. Type your email ID. Tell me your email ID. Yeah, anyone, you can pass it to the class. P LAMI LA. Yeah, one of your classmates is going to send this in the WhatsApp group of your class. Please take that and we will do 1 or 2 questions on that. Remaining questions you can try later. Marginal costing. It's a study material of Institute of Chartered Accountant of India. We can make use of this material. Have you received? Check it. If it is received, send it to the WhatsApp group. On separate group we have no accounting for manager. Let them come. Let them come if they want this material. Yeah. Any group where people are there, you send it. We go to them where they are. Yeah, anyone. Please do it fast. Yeah. They can also do it in the afternoon. Fine. Not came? Yeah, if it is there. See, my problem is I can't send it in WhatsApp. It take too much of time to load that in WhatsApp. Your mail ID is correct. I'll do one thing. Go to ICAI space marginal costing. If you type, you'll get one file in Google itself. Second one. Chapter 12. Yeah. This one. Yes. Yeah. Chapter 12 is there? Yeah. We'll send it. Right. Directly send it to the group. Yeah, this one. Sharing the group. Okay. So we're getting one file, PDF file in the WhatsApp group. We will take that and check for 2-3 questions of the same line. So before that, anybody has any doubt in this concept of understanding the marginal costing? What is marginal cost? What is marginal costing? What is the use of marginal costing? Then what is CVP analysis or break-even analysis? Margin of safety. How do we calculate break-even point by doing the by applying the formula as well as by applying the chart? If anybody has any doubt, please let me know right now before we go to the next question. Yeah, I think it is there. Please, all of you take it in EMBA trimester 1 group. It is there. First, they have given the basic formulas, what and all we have discussed so far. Okay, before we work out a question, look at this formula number 8, 7 and 8. Formula number 7 and 8, page number 2. Page number 2, formula number 7 and 8. PV ratio, what we just discussed is contribution by sales into 100. That is given in this formula number 6. 7, they are giving you one small different formula, that is change in profit divided by change in sales. Suppose you have 2-year data. 2-year data if you have, if you don't have contribution, if you don't have sales, okay, only change in profit and change in sales is there. Last year my profit was 1 crore. This year my profit was 1 crore. This year my profit is 1 crore 50,000. Sorry, 1 crore 50 lakhs. So change is how much? 50 lakhs. Okay, divided by change in sales. Last year, my sales was 10 crore. This year, my sales is 12 crore. So 2 crore is the change. So that you have to apply and find out the PV ratio. If there is 2-year data and we don't have data for contribution and sales. Okay. And then similarly, PV ratio, change in contribution divided by change in sales. So I don't have contribution. You can apply profit directly and you can find out PV ratio. That's one small change you can understand. Remaining all formula what you discussed. Okay. Come to the question. Yeah, question number 1, section B, question number 1, page number 12.5, page number 5. Computation of break-even point, margin of safety, sales volume, profit, contribution, and PV ratio. Look at the question number 1. A company produces single output, single product, which sells for rupees 20 per unit. So what is it? What is 20? Huh? What? Selling price per unit. Per unit. Okay. Variable cost is 15. I think that question only you done. No. Variable cost is 15. And then fixed cost is 6,30,000. You are asked to calculate sales value needed to earn a profit of 10% on sale. Okay, this we don't discuss. Please write down the formula. One more formula, one more concept, that is sales required to earn a profit. Sales to earn a desired profit. We are going to calculate the sales to earn a X amount of profit. Okay, desired profit. Sales to earn required amount of profit or desired amount of profit. How do you find out? There is a formula for this. That you leave it, write the formula. Fixed cost plus, I'll tell you another formula. Fixed cost plus desired profit. Fixed cost plus desired profit divided by contribution per unit. Fixed cost plus desired profit divided by contribution per unit. Divided by contribution per unit. If you apply this logic, you will get the sales value to reach a profit of that amount we expect. See, fixed cost is one which is going to give me 0. Fixed cost and variable cost equal to total cost. Okay, if it is equal to sales, I get 0 as my profit. How much profit I need? That is added there divided by contribution per unit. Okay. Now look at the data given to us. Selling price, write it. Selling price per unit is 20. Selling price per unit is 20. Variable cost per unit is rupees 15. Okay, 15. Fixed cost is equal to rupees 6,30,000. Only these 3 items are given, 3 data are given to us. With these 3, we have to find out the sales needed to earn a profit of 10% on sales. Next line, profit expected or profit needed. Profit needed is equal to how much? Profit needed is equal to 10% on sales. That means 10% on sales. That is equal to 10 by 100 into 20 rupees. 10 by 100 into 20. So 2 rupee per unit, they are expecting a profit. 2 rupees per unit, they are expecting a profit. So we don't know how many units we are going to sell. Okay, take it. Suppose the sales is equal to X. Sales is equal to X. Sales is equal to X. Okay. How the sales value will be determined? Sales is equal to S is equal to X line. S is equal to, what is the logic of sales value? The variable cost plus fixed cost plus profit. Right. S is equal to variable cost VC plus FC plus profit. Variable cost plus fixed cost plus profit. Okay. Now we already know what is 1 unit selling price. 1 unit selling price we know. But how many units you are going to sell? We don't know. That will be taken as X. Sales in unit is equal to X we have taken. Okay, now next line. Rupees 20X. Rupees 20X. Why it is rupees 20X? 20 rupees is the selling price of one unit. How many units we are going to sell? We don't know. That is what X. We're going to find it out. So 20X is equal to rupees 15X. What is 15X? Variable cost for X number of units. Okay. 15X plus 6,30,000. 6,30,000 plus profit per unit is how much? 2 rupees. So 2X. Rupees 2X. Yeah, find it out. Solve the equation for X. Solve this equation for X. Yeah, fixed cost is 6,30,000. 2,10,000 is the number of units to be sold to earn a profit of rupees 2 per unit. Now, how much should be the amount of sales? Value of sales. Amount of sales is equal to, all of you are getting 2,10,000. How it is? Solving that equation for X value. 20X is equal to 15X plus 6,30,000 plus 2X. That means 20X minus 17X is equal to 6,30,000. So 20 minus 17 is equal to 3. So 3X is equal to 6,30,000. So X is equal to 6,30 by 3. That is equal to 2,10,000 units. Then next line, sales in value is equal to, how do you calculate? 2,10,000 into 20 rupees per unit selling price. So sales in value is equal to how much? 42 lakhs. If you sell the total value of 42 lakhs, you will get a profit of 10% on sales. How much profit you are expecting now? 2 rupees per unit means total profit expected is how much? You are expecting 2 rupees per unit selling profit. No. If that is the case, how much amount you will get as a profit? 4,20,000 will get a profit. So apply my formula what I gave in the first. Fixed cost plus desired profit divided by contribution per unit. If you apply that formula, you will get it answer. Check it alternatively. Fixed cost plus desired profit divided by contribution per unit. What is fixed cost? 6,30,000 plus desired profit, that is 4,20,000. 630 plus 420 divided by contribution per unit. What is contribution per unit?
5.
20 minus 50, that is equal to 5. Yeah, 5. How much you are getting now? 2,10,000. I repeat again. Sales required to earn a desired profit is equal to fixed cost plus desired profit divided by divided by contribution per unit. That is equal to, in this question, 6,30,000 plus 4,20,000 divided by 20 minus 15, that is 5. So it is 10,50,000 divided by 5 is equal to 2,10,000 units. Okay. Final answer. What is 1,26,000? Fixed cost how much? 6,30,000 plus 4,20,000. Yeah, divided by 5 is equal to 6,30,000 plus 4,20,000 is equal to 10,50,000. No. divided by 5 is equal to 2,10,000 units. Okay. Next question. Look at the second question. Calculate sales price per unit to bring break-even point down to 1,20,000 units. So they're telling you break-even point should be 1,20,000. If I want to make a sale of 1,20,000, at that time my profit and loss would be 0. If that is the case, how much should be the selling price? Selling price per unit is asking. Okay, write down. Point number 2. Selling price if break-even point is equal to 1,20,000 units. Selling price if break-even point is equal to 1,20,000 units. I want to find out the selling price per unit so that my break-even point should be 1,20,000 units only. Okay. Okay, write the formula. Break-even point in unit is equal to break-even point in unit is equal to, what's the formula?
Total
Fixed cost by contribution per unit. Okay. We don't know contribution per unit. We know fixed cost and we know break-even point. What is the break-even point? 1,20,000. So write it. 1,20,000 is equal to 1,20,000 unit is equal to 6,30,000 divided by contribution per unit. This is given the question. What is given? Second question. 1,20,000. 1,20,000 unit is equal to 6,30,000 rupees divided by contribution per unit. We don't know contribution per unit. Why we don't know contribution per unit? Selling price we don't know. Selling price we don't know means we can't calculate. Next line. Next line. So contribution per unit is equal to just cross multiplication. 6,30,000 divided by 6,30,000 divided by 1,20,000. That is equal to 5.25. If contribution is equal to 5.25, we already know what is the variable cost. What is the variable cost? 15 rupees variable cost. So next line, contribution per unit is equal to selling price minus contribution per unit is equal to selling price per unit minus variable cost per unit. All right. Contribution per unit is equal to selling price per unit minus variable cost per unit. Now you tell me what is selling price. We already have contribution per unit, that is 5.25 is equal to SP minus 15. 15 no. 15 right? Variable cost is 15 no. Yeah, 15. So selling price would be equal to 5.25 plus variable cost. Yeah, 20.25. So now you tell me the relationship between the selling price and break-even point. If selling price increases, break-even point. Look at the question. It was given the question selling price as 20 rupees. Okay, now break-even point is to be 1,20,000 unit means my selling price should be increased. So there is a relationship. There is a inverse relationship between selling price and break-even point. If other thing remains constant, if selling price goes up, break-even point come down. Okay. Next, question number 3. Question number 3. Point number C. Calculate margin of safety. Calculate margin of safety. Sales if profit is 60,000. They want 60,000 rupees profit. Okay, then what is the margin of safety? We already have a formula, no? Margin of safety is equal to profit divided by contribution per unit or PV ratio. Okay. margin of safety is equal to profit divided by PV ratio. If you do, you will get in value. PV ratio will always give you the answer in value. Contribution per unit will give you the answer in number of units. Okay. We need now in rupees. So you can apply PV ratio formula. So what is the profit they are expecting? 60,000. 60 divided by PV ratio. What is PV ratio? Contribution by sales. What is contribution here? In the original data, 5 rupees the contribution, right? 20 minus 15, 5 rupees contribution divided by 20. So it is 25%. So 60,000 divided by 0.25. 60,000 divided by 0.25 is equal to margin of sales, margin of safety of sales.
This is coming in terms of
Value, correct. So 60,000 unit, it will come in units. For 2,40,000. So this concept is simple, but application, there are so many way of applying it. Okay, what I have done in this PDF file, first directly I told you what is what, but here it is little not complicated, little finding out other things. Okay, same logic is the same. There is no formula we changed. Logic is the same, but there it was directly finding out the break-even point. But here it is some other values we are finding it out. Okay, try question number 2. A company has fixed cost of 90,000. 2,40,000. Yeah, 60,000 by 0.25. No, so 0.25. 25%. No? Yeah. So second question to try. A company has a fixed cost of 90,000, sales of 3 lakhs, and profit is rupees 60,000. Okay. Write down the data. Fixed cost 90,000, sales 3 lakhs, profit 60,000. Can anyone tell me what is the variable cost in this question before we write down anything? 3 data are given to you: 90, 3, and 60. 90,000, 3 lakhs, 60,000. What? 1 lakh? How, sir? How you got it? Profit plus fixed cost is equal to what? Profit plus fixed cost is equal to contribution. Okay. Sales minus contribution is equal to variable cost. In that way, how much it should be? But I'm not telling you a new formula. The same A is equal to B minus C. Sales is equal to fixed cost plus variable cost plus profit. Okay. See here in this data, second question, look at the question. Second question, they're giving you fixed cost as 90,000. Am I right? And then sales is equal to rupees 3 lakhs and profit is equal to 60,000. If that is the case, what will be the variable cost?
1,50,000.
Just we go from the down in the statement. Okay, what is the statement? Sales minus variable cost is equal to contribution. Contribution minus fixed cost is equal to profit. That's a normal statement. Now in this question, we don't have any variable cost given in the question. So we go from the down. That means profit is given. Profit is 60,000 and fixed cost is given. That is 90,000. So 60 plus 90 is equal to 1,50,000. That should be equal to
Variable.
Is it not contribution? Fixed cost plus profit is equal to what? Contribution. So 1,50,000 is contribution. But sales is 3 lakhs. So 3 lakhs is sales. Contribution is 1,50,000. The variable cost should be 1,50,000. In that way, it is 1,50,000. Okay. Okay, that's one understanding. But that is another question, I think. Look at the question. Sales volume. Calculate sales volume if in the next period the company suffered a loss of 30,000. So loss is 30. Next line. If loss is equal to 30, what is equal to sales? They're asking you to find out that only. Loss, if loss is equal to 30, then what should be amount of sales? Okay, find it out and check it. Yeah. Are you able to get it? The next period, they're having a loss of 30,000. If that is the case, what should be the sales? What should have been the sales? Sales is equal to question mark. Find it out. Sales is equal to question mark. Find it out. Contribution is equal to fixed cost plus or minus profit or loss. In this case, contribution is how much? Or any other way to find?
2,40,000. 2,40,000.
2,40,000
40,000.
is the 2,40,000 is what?
Contribution.
How do you calculate?
Sales minus profit.
Sales minus profit is contribution. That's contribution. Sales how much? You have to find it out. Correct. Fixed cost plus or minus profit or loss is contribution. Will you accept or not? Fixed cost plus profit is equal to contribution, or fixed cost minus loss is equal to contribution. So fixed cost is given the question, that is okay. That logic is fine. Contribution is equal to fixed cost minus loss. What is fixed cost? 90,000 minus loss. Loss is 30,000. So it's equal to 60,000. Contribution is 60,000. That's good. Then how do you calculate sales? Sales is equal to contribution by PV ratio. That's also fine. But is there any variable cost given to you? Simple. Sales is equal to contribution by PV ratio. Sales is equal to contribution by PV ratio. Contribution by PV ratio. Variable cost will vary according to volume of production. No, if you take that value variable cost, it's not a correct cost. For the production of 1 unit, what is the variable cost? For the production of 100 units, what is the variable cost? It's changing. So we can't take that as a base. So it's simple. Sales is equal to contribution by PV ratio. What is PV ratio? PV ratio will not change. What is the volume of production? No worries. It's in percentage term, so it won't change. What is the PV ratio here? PV ratio. Already you calculated contribution. No. Contribution is 60,000 for a sales of. No. Go to the original data. There you can find out the contribution. No. $1,50,000 is the contribution. Okay. 1,50,000. So 1,50,000 is the contribution, means here it is. Oh, we already calculated here contribution. 60,000 is the contribution. I'm telling you about PV ratio. What is the PV ratio for original case? PV ratio. What is PV ratio? Contribution by sales into 100. Original data contribution was 1,50,000. Am I right? 1,50,000 for the sales of 3 lakh. So what's the PV ratio? Contribution is 1,50,000. Sales was 3 lakhs. What's the PV ratio? 50%. So apply that 50% here. 0.5, because that won't change, because it's in terms of percentage.
Why we are not taking the new contribution 60,000 in case of PV?
We have taken.
No, in PV ratio.
How do you calculate with the new contribution PV ratio? What is PV ratio? PV ratio is equal to contribution by sales into 100. Sales only you are going to find it out. So if you don't have sales, how do you calculate PV ratio? Okay, so PV ratio will remain unchanged because it's in the percentage term. Okay, accordingly it will be taking the value. So you take 0.5, 90,000 divided, 60,000 divided by 0.5 is equal to how much? 1,20,000 is the sales. If you have a doubt, you can check it. 1,20,000 is the sales. For that, the contribution is 60,000. So fixed cost is how much? 90,000. So loss is going to be 30,000. Okay. Next, point number 2. what is the margin of safety for a profit of 90,000? If I want 90,000 rupees as profit, what should be my margin of safety? Margin of safety is equal to profit divided by PV ratio. Margin of safety is equal to profit divided by PV ratio. Profit expected is 90,000 divided by 0.5. 90,000 divided by 0.5 is equal to 1,80,000. Okay. How do you find out break-even point? Fixed cost by PV ratio. Margin of safety is profit by PV ratio. What was the profit expected in the second case? 90,000 divided by PV ratio. What is PV ratio? PV ratio won't change, 0.5. Okay, so 90 divided by 0.5 is equal to 1,80,000. This is 90,000 divided by 0.5. Okay. 90,000 by 0.5 is equal to 1,80,000. 1,80,000, no, double. 0.5, no. If it is 1, becomes 90. 0.5 is equal to double. 1,80,000. Calculate the break-even sales. Break-even sales is equal to fixed cost. Break-even sales in value. Break-even sales in value is equal to break-even sales in value. Break-even point in value is equal to fixed cost divided by PV ratio. Fixed cost we know. What is the fixed cost? 90,000 divided by PV ratio. We know the PV ratio. 0.5. Yeah, same answer. 1,80,000. That's all. Okay. Right. Like this, there are so many questions are there in this file. You can just go through this. Answers are there. So why do we need this? Just a calculation. Why do we need to find out break-even point? Okay, what's the use of finding out break-even point? No, not that. We already decided to take the business. We're going to do it. How much pressure you can give on the sales guy? That is what the break-even point is going to tell you. At least I have to sell X unit, n number of units. One second. How that at least I can reach that point? I will call my sales force and I will assign this task. Okay. Then more pressure. I want Y amount of profit. For that, what is the sales required? Break-even point is the minimum sales I have to make. The worst case, I have to perform that much. Okay. Now I need some rate of return on my investment. My investment is 1 crore, 10% rate of return. So 10 lakh, I need profit. So fixed cost plus this 10 lakh divided by PV ratio is going to be my value of sales, or divided by contribution per unit is equal to my volume of sales, the unit of sales, quantity of sales. Then I will decide who has to achieve how much. Okay, that is what the aspect of marginal costing is. You are asking something? Margin of safety? Per unit, per unit, why do you want to calculate? You can calculate in total. Margin of safety in total, maybe for unit or maybe for value. Margin of safety you can calculate in value or you can calculate in units, but it is in total. There is nothing called margin of safety per unit. Margin of safety in units or margin of safety in which one? No. End answer is not coming as you want to assume. If you divide that by PV ratio, you will get in rupees, in value. If you take it by contribution, you will get in units. You can't assume whatever it is coming. If you substitute the formula of PV ratio, you will get in rupees. If you take in contribution per unit, you will get it in units. That's all. Nothing like per unit. Okay. Anything else? So
Give us some suggestion.
suggestion, go through this full PDF file.
There'll be like theoretical questions.
Both will be there 50-50. Calculate margin of safety is numerical. What is margin of safety is theory. If you are clever enough, you can write same answer for both. You can write same answer. Margin of safety is nothing but the excess of total sales over the break-even sales. For example, do one problem. Not Robert, 5 mark. Okay. What do you mean by trial balance? Theory question. Prepare a trial balance for the following data is the numerical question. Okay. What is cost sheet? Is the theory question. Prepare a cost sheet is the numerical question. That's all. In accounting, there's nothing like theory. All are numerical only, but the way in which we are asking you the question. Okay. It's not like, sir, I know theory, so I will score mark. It is not like in accounting. If you don't know the concept of doing what it is, you can't write the theory and you can't do the problem also. Theory is just to know what it is, and you are applying that theory to find out something that is called practical. Okay. Journal, ledger, trial balance, final account, ratio. In the case of ratio, you take an example. What are the different ratios are available? What are the different ratios available to analyze the performance of the company? Theory question. I'll give you the financial statement, calculate so and so ratios. So numerical question. Without you knowing what is the ratio, you can't apply that. So there is nothing called theory separately, nothing called practical separately. Both are there. But your theory question, if suppose writing in theory statement, writing in sentences, maybe 50%. Right? Calculating like this, maybe another 50% in the exam. Okay. Somebody was asking a doubt in the assignment. Somebody messaged me. I could not answer your message in the WhatsApp. Is it from your class or other class? And moreover, you are asking for again and again confirmation. You see the board and travel. There is a board, Mysore, 200-kilometer travel. Believe that board. Go to Mysore. You will reach. After 10 minutes, there is no board. You are asking, sir, is it right way? Am I going to Mysore only? You are asking. Meaning, I have explained that in the class. You want to reconfirm. And somebody more clever, that sending the assignment. Sir, please check it. If there is any mistake, tell me. I will correct it and submit it. That is not required. You submit it. Believe us and you submit it. Before submitting, you once again cross-check it. Okay. And the selection of companies. Sir, I have taken 2 listed company. Is it okay? Somebody's message. That's what is asked to you. Okay. You go through once and you are in the last level of education. So what you do? You reconfirm on your own. Doubt may be different. Sir, should I take a standalone balance sheet or should I take group balance sheet? That could be a doubt. I can tell you an answer. Standalone is better. Okay, we already discussed in the class. Group balance sheet, don't take. Only the one company balance sheet you take. That's okay. Okay, and which year I have to take? That can be a doubt. But selecting a listed company, selecting 2 companies from the same industry, you want to reconfirm again and again. That reconfirmation, even it's not for even school student. You understand and do it on your own. Okay, but doubt, technically, if you have any doubt, you can ask me. Cost sheet. For that, you messaged me? No. What is that? You can tell to the class now. Okay. Specific doubt. That okay. No, you can ask. No problem. Anybody has any other specific doubt regarding assignment?
Sir, we have to take last 2 years or 1 year balance sheet?
2 year or 1 year?
2 years?
Okay. 1 year, 2 companies.
Okay, 1 year, 2 companies. Okay, thank you, sir.
Latest 1 year, 2 companies. 2020-21.
Yeah, got it. Thank you.
Okay, 2021 for 2 companies in the same industry. And there is a PDF file shared with you in the LMS. All ratios are there and all formulas are there. That only we discuss in the class. Based on that, you take the data only from the company's balance sheet and you work out. That's all. Anything else? Any other doubt? So today we completed the break-even analysis. What else is there? How many class? Only 2 more or one more? Only one more. So we have one cash flow statement that we will do in the next class. Cash flow statement. Okay. And then everything is covered now. First journal, ledger, trial balance, financial statement, analysis of financial statement, that is ratio analysis. Then cost accounting is covered. Actually, this should be the last class. Class means this content should be in the last class. I purposefully just taken it before. The cash flow statement will do it in the next class. Any doubt before we close for today? Anybody has any other doubt? The shared PDF file from the ICAI site, please make use of that. It will be little moderate and more than moderate questions. Okay, you do just moderate questions. To the tail end, it will be little more complicated. In your words, complicated question will be there. Don't worry about that. Up to 50%. The document is shared with up to 50%. You should be thorough. The next to 50% you can just go through. Okay. Any other doubt with regard to today's class or with regard to assignment or any other chapter or any other concept? Please practice more number of questions so that you can write easily in the exam. Journal, please do more questions. One question, decide to take it. Okay. Last class, I'll give you some more information about the exam. Okay, after confirming with the office. Okay, if you don't have any other question, we are closing it now. See you again in the next class. Thank you. Thank you.
Thank you, sir.